Limited Q1 FY27 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Majumdar from 360 ONE Capital. Thank you, and over to you, sir.
Yeah. Good afternoon, everyone, and welcome to the Q1 FY27 earnings call of HEG Ltd. We have with us today Mr. Ravi Jhunjhunwala, Chairman, Managing Director and CEO, and Mr. Riju Jhunjhunwala, Vice Chairman, along with their colleague, Mr. Manish Gulati, Executive Director, Mr. Om Prakash Ajmera, Group CFO, Mr. Ankur Khaitan, MD and CEO, TACC Limited, and Mr. Ravi Tripathi, CFO, HEG Limited, Mr. Puneet Anand, Group CSO. Also on the call are Ms. Neha Rajvanshi, CFO, HEG Advanced Materials, and Mr. Salil Bawa, Group Head, Investor Relations. So first of all, sir, congratulations on a very good quarter, on the first quarter, and without much ado, I would like to hand over the call for the opening remarks of the management.
So, good afternoon, everyone, and welcome to our conference call for the first quarter of financial year 26-27. The year began in a shadow of an ongoing war in the Middle East, which materially impacted energy prices globally, besides disturbing world trade and pushing shipping costs disproportionately very high in some cases, and also increased transit times. In this backdrop, let me give you a broader picture of the global steel industry and its resultant impact on our company. According to World Steel Association's data, global steel production during the first half of calendar year 26 showed signs of gradual stabilization, declining by a marginal 0.7% year-on-year to around 931 million tons. This indicates that the contraction is bottoming out and global steel demand is beginning to find its floor. Surprisingly, steel production outside of China remained highly resilient, expanding by 2.1% year-on-year to 431 million tons after many years. This positive momentum in the world steel excluding China represents a supportive demand environment for our products. While HEG does not sell electrodes directly to China, Chinese domestic steel market dynamics continue to influence global pricing. A weak real estate sector in China has forced domestic mills to export surplus production of steel. While Chinese steel exports for the first half of 2026 eased slightly to 55 million tons, which is a 5.6% decline from the peak of 2025, they still remain at historically elevated levels. This sustained export pressure has prompted a broad wave of defensive trade measures, including anti-dumping and safeguard duties across key regions like the US, EU, and India. Among key steel-producing regions, India remained one of the strongest performing markets, with crude steel output increasing by approximately 7.1% year-on-year to around 87 million tons in the first half of 2026. This growth was supported by robust domestic demand for infrastructure development, construction, and manufacturing activities. In matured economies, we saw a solid, broad-based recovery. Steel production in the United States recorded an year-on-year growth of 6.3% in the first half of 2026 to reach 43 million tons, while Germany's output also rose close to 8% to 18.6 million tons. We also saw an exceptional growth in Vietnam, which surged by as high as 27% year-on-year to over 15 million tons, cementing its position as a major Southeast Asian steel powerhouse. Various changes in the trade policy in several countries and the ongoing geopolitical tensions remain key sources of near-term uncertainty. Changes in U.S. trade policies, including tariffs and several country and product-specific measures, are disrupting the established global trade channels. At the same time, tensions in the Middle East are affecting the oil and gas market, contributing to severely higher freight and energy costs and creating a challenging business environment across industries. These pressures are also being felt across all raw materials like needle coke and other key inputs in the supply chain, which are gradually getting reflected in our input costs. We continue to manage these developments through operational efficiencies. Despite all this, the medium to long-term outlook for graphite electrodes demand remains highly positive. Decarbonization policies, including EU's Carbon Border Adjustment Mechanism, CBAM, are accelerating the global shift from carbon-heavy blast furnace steel to lower-emission electric arc furnaces. This structural trend is heavily supported by latest OECD steel outlook, which highlights that approximately 71 million tons of new electric arc furnace steel making capacity is planned globally for completion between now and end of 2028. As graphite electrodes are indispensable for steel making, electric arc furnace steel making, these planned capacity additions support a favorable long-term demand outlook for the industry and validate the strategic rationale for our recent expansion from 80 to 100,000 tons and a further expansion that we are currently undertaking to reach 115,000 tons, which is on track and should be in operation by early 2028. Against this backdrop, we remain confident of HEG's long-term growth prospects, and we believe that we are very well positioned to benefit from the continued transition towards electric arc furnace steel making, resulting into increase in demand for electrodes. Our plant, with an installed capacity of 100,000 tons per annum, remains by far the world's largest single location plant in the world. Its scale and cost-efficient operations place HEG among the most competitive producers globally. During the past quarter, we operated the plant at an average capacity utilization of more than 90%, reflecting strong operating efficiency, and expect to continue operating at more than 90% in the forthcoming quarters as well. Further expansion that we undertook to reach 115,000 tons is likely to be commissioned by early 2028. This will further increase the gap between our plant and the next two largest plants in the world, which are in the region of 70,000 tons per annum. With our scale, competitive cost position, location, high utilization levels, and expanding capacities, we believe HEG is very well placed to capture the long-term growth opportunities emerging across the global electrode industry worldwide. Now, update on demerger, which my colleague Puneet is going to do.
Hi, good afternoon, everyone. So we are pleased to inform you that the composite scheme of the arrangement is progressing very well. The NCLT has received its order, and the company is awaiting pronouncement of the order. The company will provide an update shortly on the timeline of effecting the scheme and the record date. We will also hold an investor call to explain the HEG advanced material business once the order is pronounced and a copy of it is being received.
With that, I'll now hand over to our CFO, Ravi Tripathi, to take you through the quarterly financial performance, after which we will open the floor for Q&A. Thank you.
Thank you, sir. Good afternoon, everyone, and thank you for joining us. I will briefly take you through our financial and operational performance for the first quarter of FY26-27. We have begun the financial year on a strong note, delivering a meaningful improvement in profitability despite a marginal decline in volumes. The quarter demonstrates the strength of our operating model, supported by improved realization, driven by product and geographical mix, disciplined cost management, and continued focus on operational excellence. On a standalone basis, revenue from operations increased by 11% on year-on-year basis to rupees 681 crores compared with rupees 613 crores in Q1 of the previous year. Total income also increased by 11% to rupees 731 crores from rupees 660 crores. On a consolidated basis, revenue from operations also grew by 11% to rupees 681 crores, while total income increased by 8% to rupees 724 crores from rupees 673 crores in the corresponding quarter of the last year. Standalone EBITDA increased by 38% on year-on-year basis to rupees 211 crores from rupees 154 crores. With EBITDA margins also improved to 29% compared with 23% in the corresponding quarter of the year. At the consolidated level, EBITDA increased by 17% to rupees 194 crores from rupees 166 crores, while EBITDA margins improved to 27% from 25% of the last year. Standalone profit after tax increased by 53% on year-on-year basis to rupees 110 crores from rupees 72 crores, while consolidated profit after tax increased by 23% to rupees 122 crores from rupees 100 crores. Capacity utilization during the quarter stood at 90% plus, which is marginally lower than the corresponding period of last year. However, the impact of lower volumes was more than offset by better realization, improved operating efficiencies, and effective cost management, resulting in a healthy expansion in both margins and earnings. Sequentially, the business witnessed a strong recovery compared with the previous quarter. Standalone revenue increased by 13% over Q4 FY25-26. More importantly, the standalone EBITDA improved from a loss of rupees 126 crores in the previous quarter to a positive EBITDA of rupees 211 crores in the current quarter. Standalone profit after tax also recovered from a loss of rupees 163 crores to a profit of rupees 110 crores. Similarly, on a consolidated basis, EBITDA improved from a loss of rupees 108 crores in Q4 FY25-26 to rupees 194 crores, while profit after tax improved from a loss of rupees 119 crores to a profit of rupees 122 crores. In previous quarter, the loss reported due to MTM loss in foreign equity investments. Our balance sheet continues to remain one of our key strengths. The company remains debt-free with no long-term loan borrowings, and our treasury stood at approximately rupees 858 crores as of 30th June 2026. This strong liquidity position provides us with the financial flexibility to pursue future growth opportunities while maintaining resilience across business cycles. Overall, we are encouraged by the strong start to the year. While the external environment continues to evolve, our focus remains on enhancing operational efficiency, maintaining cost discipline, strengthening our competitive position, and creating sustainable long-term value for our stakeholders. For a more detailed discussion on the quarterly performance, I would request you to refer to the investor presentation which has been uploaded on the company's website as well as with the stock exchanges. With that, I would now like to hand over the call over to Q&A questions. Thank you. Over to me.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Lahoti from Aditya Birla. Please proceed.
Thanks for the opportunity. My first question is on revenue mix. How much was the share of Middle East in Q1 and to which region did we divert lost volumes?
Sorry, Amit, can you repeat this for us? Actually, the voice was echoing. Go ahead. Please repeat it.
Yeah, so my question is in revenue mix. How much was the share of Middle East, and to which region did we divert lost volumes due to war?
So your voice is not clear.
But I have understood the question anyway. He understood the question. So Amit is asking what was our share in Middle East. See, over the years, it's around 20%. And it hardly matters because we are so well diversified across countries that some temporary delay in shipping, etc., was easily spread over to the rest of 30 countries we operate.
Okay, so did we not lose any volumes in Q1?
No, we didn't lose any volume. As you can see, we still operated in excess of 91%.
Okay. And my second question is on implied price realizations, which I calculate using the revenue and the volumes. So it appears that the benefit of any recent price hike is yet to flow into earnings. So how much of price increase can we expect in the coming quarters?
See, for companies like us in this electrode business, normally you're always booked 3-4 months ahead. So whosoever is announcing a price hike, and we also, we have to start raising prices, will only happen October onwards because we anyway committed up to September. So whatever price hikes which will come in later, will actually start showing up later in the year. However, in our existing markets, whether it's India or elsewhere, whatever new business we are booking are at higher prices. So we continue to gradually raise prices when our input costs are increasing, and also the input prices are increasing.
Okay, thank you, sir.
Thank you. The next question is from the line of Ahmad from Unify Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on great set of numbers and execution in the tough environment. Same follow-up question to what Amit was asking. If we have had 20% roughly volumes from Middle East market over the years, then can you elaborate a little bit which markets we have diverted those volumes to, where you see the better demand and has absorbed your balance volumes? And also you can quantify, if possible, how much the Middle East volumes have degrown by.
Amit, it is not the right forum to talk in so much of details. I mean, obviously, it's a listed company. We have competitors all over the world. So we should not be divulging these kinds of numbers. But suffice it to say that our exports continue to be in the region of 70-75%, which has been the case for not now, but last 25-30 years. And we are practically exporting our electrodes to each part of the world, to the smallest countries, sometimes in Africa, to Latin America, to the largest consuming country, which is the US and Europe. So more than that, I mean, we should not be talking in public about how much we are selling to whom, how much has our market share come up or come down. It happens from quarter to quarter. It's nothing so special about this particular quarter. The world is large enough to take a small piece of drop in one region to some other region.
Sure, sir, I understand it. The question where I was coming from was if we look at whatever the regulatory action being planned in the US market, so in terms of both CVD and ADD, so in that case, what rate in your internal assumptions you would have considered so that the US volumes for us continue to hold or grow? My question was coming from that angle.
Okay. Let me try and take this question. See, first, when we talk about Middle East, we're not talking about one or two countries or Strait of Hormuz or whatever. We are talking about the bigger MENA region, Middle East, North America. So only 3-4 countries are impacted. The rest of the business is still ongoing. And they're just postponements. I mean, of course, if they don't take it this month, they will take it next month. So there is no connect between this and the US business per se. The CVDs and ADs, which you're mentioning, that thing will keep on going, and we will see what results come, and we'll see. I mean, right now,
Of course, as we are, as Chairman said, we have very well diversified markets. So it remains to be seen. Maybe we'll come to know around September what was the final result of the CVDs and anti-dumpings.
In terms of the pricing, you would have had some all committed volumes, and you are saying from October onwards there will be price hike, and there will be, I'm assuming there will be proportionate hike in the needle coke as well. So how would you assume in terms of your net EBITDA expansion, whether the price hike will be much higher than the cost increase we have seen? Any sort of sense you can give?
You see, we have seen two of our colleagues announcing fairly steep increases, the American company and a Japanese company. And obviously their costs have also gone up, so have our costs gone up. And I think one of them has announced a price increase of between $600 to $1,200, depending on the size and quality. The other one has given one number of $930. So they have just been talking about these in the last 6-7 weeks. And as Manish said, we are more or less booked. Each one of us is more or less booked at least for the next 1 quarter or 2 quarters. So the trend is, it's a very favorable trend that, and it had to happen in any case. I mean, the world has seen so many different kinds of problems relating to several price increases in raw material, oil, shipments, this, that like anything else, I mean, prices are going up for everything. So we will obviously follow, and we are following. There are only 3-4 of us in the world. So 2 of them have already announced their intent. They've given the numbers on it. They're all available in the public domain. So apart from these 2-3 companies that we spoke about, then there is only we and our Indian colleagues. So obviously, so we will follow suit. But nothing substantial is going to happen in the next 1 quarter or next 2 quarters, because more or less everybody is booked more or less fully, if not fully, more or less fully for the next 2 quarters.
Sure.
But so is the case with so is the case with our raw material. I mean, whatever prices of raw material will go up, like needle coke and all, the impact of that product will only come by November, December, January. Everybody is covered, or everybody has ordered needle coke at the old price.
Sure. Just one accounting question. If I look at our other income number, that's close to 43 crores, and there will be about 7-8 crore interest income which you have disclosed in the segmental numbers. So CFO sir, if you can explain what the balance component is it forex gain or anything else?
It is the fair valuation gain on the investment side. The second part.
Sorry, can you come again, please?
There is a fair valuation gain on the investments.
Okay. Sure. Got it. Thank you so much. I have a few more questions. I'll come back in the queue.
Thank you. The next question is from the line of Akhilesh Kumar from Emkay Global. Please proceed.
Yeah, thank you so much for the opportunity. First of all, congratulations on the good set of numbers. So I have a couple of questions. So my first question is on the EF capacity commissioning. So we were talking about 30 million tons of capacity commissioning in CY26. So now since 1H is already passed, so how much of that has already been kind of commissioned, or what's the status on that as of now?
You see, a lot of this has been in operation, and balance is going to be in operation in the next 2-3 quarters. We are tracking each and every new facility, and whatever we have been talking about in terms of new capacity for last 2 years, we are very happy to say that they're all happening. I mean, these are all billion, $2 billion kind of a greenfield expansion. So a couple of weeks or couple of months delay, or in some cases early implementation, is very, very practical. But between 25-30 million tons has already come in the last 3, 4, 5 quarters. And from all our conversation with our existing customers, and from whatever we hear from the market, we are seeing that whatever numbers that we have been talking about new electric arc furnaces coming up in the next 2-3 years, and then let's say in 29-30, is more or less correct. We could be out by 10, 15, 20% plus minus here and there, but they are all on the anvil and they are all coming.
Right. So is it fair to say, since in 2025, close to 18 million tons of capacity got commissioned, so first half should be somewhere around 8 to 10 million tons already been commissioned?
Yes. Between these 2 years, 25 and 26, 24 and 25, about 20-21 million metric tons has certainly come up. I have the name if you'd like to know offline. And then in these 3 years, 26, 27, 28, we are talking about almost 60 metric tons to come. And during the year, half year has gone by, I think 8-10 million metric tons has already come up. So if you really very interested in knowing which customer where, I'll be happy to provide, but offline.
Sure. Thank you for that, sir. My second question is on price hike. So there were a lot of concerns which were coming up regarding the GrafTech's price hike, that it is not getting absorbed in the market. So what's the status on that, since now Tokai Carbon has also come up with the price hike? So how does the situation improve for us from Q3 to Q4, and do we see that sustenance of price hikes in further years also, FY28 and FY29, for example?
Shiva, we would not like to really comment upon the GrafTech and Tokai pricing, except sharing with you what we have seen in the public domain. So this is an intent to raise prices. How much gets eventually absorbed by the steel makers, that remains to be seen, and that will be known in next 1 or 2 quarters. But yes, these are the announcements, and of course, we also have to raise prices, because in our case, the energy cost, the ocean freights, and even needle coke is now going to go up. So far it was not, but now going to go up. So I think as an industry, we all need a price increase. Now, how much actually gets translated and what is anybody's basket is every company think, how much is already booked, now being booked, something like that. So we can't really say about, if GrafTech price is getting absorbed or not absorbed. It is not good for us to comment, and neither we are aware.
Got it. Fair point. My another question is on green tech. So how much of that 20,000 tons of node volumes is already contracted, or let's say in these advanced stages of the contracts, so that, because FY28 is now only 8 months away, so any clarity on that?
Ankur?
So we are talking with the customers for 3 to 5 years contracts, and almost about 70% of the contracts will be closed by the next 1.5 months. And all these contracts will be long-term contracts with the top tier 1 players across the world.
So when we say 70% of the contracts, that would be how much percentage of our capacity?
70% of the capacity, basically.
Okay, 70% of the capacity.
Yeah.
Okay. And my second question is on the BEL. How much of the debt do we have as of FY26 in BEL as of FY26, and how do we see it progressing for FY27 and 28?
See, there is no BEL, there is no debt in the company.
It's zero, basically.
It's zero. It's a debt-free company right now.
And it has been like this for a number of years.
Okay, so if we talk about then in the case of green tech, so let's talk about then green tech as an entity. How much of that debt would be coming to green tech, and how much would be stay with the graphite?
That would be 1,500 crores.
1,500 crores of debt. Gross debt or net debt?
It's a gross debt.
Okay.
So just to explain you, till date we haven't drawn any much money for TACC as a debt. It's just started. So when this entire demerger exercise will completed, and when you see 31st March 27 balance sheet, then there will be approximately around 1,500 crores of debt lying on the company on a gross basis.
Okay, and consecutively we'll take debt for TACC in FY28-29 because 70-30 kind of project financing will be there. So this 1,500 crores would go up eventually, right? Is my understanding correct?
So TACC debt, what we have secured till date is 1,240 from SBI, and balance is from our own capital and the internal accruals. FY29, we will see how we have to go about the additional debt if it is required for the additional capacity per se.
Okay, so out of 3,100 crores of debt, which out of 1,300 crores of capex, which is there for TACC, earlier our plan was that 70-30 we will do. So 2,100 crores of debt we would be.
When you're talking about 3,100 crores of capex, that is for 30,000 ton capacity, which the management have given a timeline that will be coming in next few years. So if you talk about in that phase, then 3,100, 70% will be through the financing. Yes, the debt will increase for that.
Perfect. That answers my question. Thank you so much for the opportunity.
Thank you. A request to all participants, please restrict your questions to 2 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Chirag from SKP Securities. Please proceed.
Hello.
Chirag, are you there?
My question is, can you hear me?
Yeah, we can.
Yeah. So, sir,
please wait while we transfer your call to our executive. All our executives are busy right now. Please hold on. Your call is important to us.
Hello. Hello. Hello.
Please wait.
Hello. Hello.
Okay.
Hello.
Everyone is on.
Yeah.
Should I take the next participant now?
Yes.
The next question is from the line of Rohan from Arihant Capital. Please proceed.
Hello, sir. Thank you for the opportunity and congratulations for the good set of numbers. My question was, sir, you recently on the yesterday you had announced that needle coke prices is expected to rise by another 10 to 15%. So, given the coverage cycle of our...
Please wait while we transfer your call.
Hello, am I audible?
Yeah, go ahead.
Yeah, so given the coverage cycle of roughly 45 days of shipping and 45 days of processing, in which quarter do we expect this higher cost material to actually flow into our P&L side? And what could be the spread per ton we can expect on this, sir?
Just to clarify, the 10 to 15% what Rijuji said yesterday was of the total our cost of making electrodes. That was roughly 10 to 15%. Left to needle coke itself, then it has gone up by a higher amount, and this will start taking effect in I think towards the end of the year, because of course because it's a long process cycle. It takes 1.5 months to make electrodes, stocks, etc., etc. So the rise will start taking effect towards the end of the year. And as we are unbooked for that quarter, we will be raising prices for the end of the year to cover the rise in cost.
Got it, sir. And we like a run rate of around like 24,000 tons annualized to roughly around like 96,000 tons, sir. So against 100K capacity. So how much headroom we can expect to have, like on the overall utilization level, what we can expect for the FY27 level, sir?
The production varies quarter to quarter. So I think there's no more headroom beyond 94 or 95. That's about the peaking. We are running in excess of 90% at present. So quarter on quarter it varies a little bit, and we think we'll close the year between 92, 95, something like that. But I don't think there's any more headroom, because then you have to create ideal conditions to reach 100, and conditions are never ideal.
Sorry, sir. One last question is, sir, like in the recent media interview, we said around 7 to 8% price improvement we had in the first quarter. So in last quarter Concall, you guided for like $300 to $500 per ton price increase we expect for FY27. So what have you contracted on the new bookings in dollar per ton basis, and what percentage of your second half volumes is now booked at this level, sir?
Okay, so we cannot speak in terms of specific numbers or dollars. What I remember in the last phone call, we said that this is the kind of which we definitely require to cover our cost. So right now we are booked up to September, or even I would say up to October, and we are trying various markets, what market, what customer, what price. So it's still a little while away. We'll know in next 1 or 2 months what kind of price increase average we are able to get from various markets. Can't say, but surely we would definitely like to cover our cost and increase margins if possible.
Got it, sir. And sir, if time is allowed, one last is on.
Sorry to interrupt you, Mr. Rohan. Can you please rejoin the queue?
No worries, man. Thank you.
Thank you. The next question is from the line of Chirag from SKP Securities. Please proceed.
Hi. So actually my question was, so our total annual project cost, which has been guided for about 2,300 crores. So what can the phasing look like over the years to come?
When we talk about green tech, isn't it?
Chirag, you are asking for what?
The anode project, the capex, 2,300 crores we are guided, right?
Yes.
Yeah, so I think it will be safe to assume around a 4 to 5 year payback on that amount.
No. So I was asking what our phasing would look like. How much our spend would be for, how much have we spent for Q1 and for the rest of the year, FY27, 28 basically.
Would you want to get that exactly? Because I think we spent.
You are asking how much capex we have spent in FY26-27, right? FY27-28, but my plant is coming on live. I'm not able to understand your question.
Yes, I'm asking for the anode project. How much have we spent in Q1 and in Q1 FY27, and for how much we'll spend for the rest of the year and for 28?
Okay, so out of the entire 2,200, 40% is already been spent. The larger amount will be spent in next 3 quarters, and we are hoping that the entire 90% payment will be done by FY27, and balance 10% will be done in FY28 first quarter.
Okay, sir. Balance 28, FY28. Got it. Yeah, that's it. That was my question.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please proceed.
Yeah, I'm audible, sir.
Yeah, hi,
Hello.
Deepak, yes.
Yeah, hi. Sir,
Yes.
thank you very much for this opportunity, sir. So just wanted to understand now on the pricing front. You mentioned that all the new business we are booking at higher prices, right? And already we have taken a price hike of 5 to 7%. And you would like to maintain the margins. So the balance price hike you take in the range of 5 to 10% more, because you mentioned your cost of production is increasing 10 to 15%. So just wanted to understand what's the price hike we are expecting and what is the sustainable margins we want to keep. I mean, given the scenario.
Rather than going into the specific numbers and all, which is very, very risky on a call, I can only tell you that we'll be able to maintain the margins that we are now talking about, and we will have a higher margin than anybody else.
Okay. So when we say maintain the margin, we are talking about this first quarter margin.
Yeah, last quarter, this quarter, I mean, not much difference.
Yeah, I mean, yes, I mean that 28-29% including other income, right? I mean, that's what we are talking about.
Yeah.
Okay, fair point. And my second question is on your green tech business. So can you throw some light on the potential of revenue from the anode capex that we are doing in TACC? And plus the Bhilwara Energy, what sort of potential we are looking at? So I'm not aware much on this green tech part. So if you can just throw some light, it would be very helpful. Yeah. So what's the potential we are looking at in each of the segment in green tech? Yeah.
So I can take that question quickly. For the anode project, it will start commercial production Q1 of next year. So we hope to operate at around 40 to 50% capacity utilization, which should give us a revenue of around 600 to 700 crores in the first year, which would ramp up to more than 1,200 crores in year 2. And in year 3, crossing around 1600 crores. And again, the margins that we are looking at, without getting into more details, roughly an EBITDA margin of 35% under all these three numbers. As far as Bhilwara Energy is concerned, we've got 2 hydro plants which are totaling around 300 megawatts, and they give us a free cash flow of between 320 to 350 crores of cash flow per year. Because both the projects are debt free, and these are the free cash flow that will come in from these 2 projects. Apart from that, we plan to put up one more hydro project, which will start operations by 2030, and one solar project which will start operation in the next 18 months. Both of them combined should add another 200 crores of EBITDA over here. So basically, in a nutshell, from HEG Green Tech, we can safely say by the year 2030, we should be aiming at a 4-digit EBITDA between all the businesses combined.
4-digit EBITDA. And this solar project is coming in 18 months, and one more hydro project is coming by 2030.
Yeah, 2.5 years from today.
2.5 years. Okay, so close to 29 maybe. Yeah.
Right.
Yeah, and what is the capacity of this hydro project?
This is 75 megawatts, and we've actually acquired this project from our previous partner, Statkraft. So a lot of work, around 30% of the work has already been done. That's why I'm saying 2.5 years. Otherwise, the normal time for a hydro plant would be anywhere between 4 to 5 years. But we are saving on that 1 year because a lot of the tunneling, etc. work has already been done from before.
And the solar project capacity?
The solar project, if it comes up, it's a 300 megawatt CNI project, which will just be a plain vanilla solar project of 300 megawatt DC capacity.
Okay, and then all these hydro projects are IPP, right?
Yeah, the hydro projects are run-of-the-river IPPs with around 30 to 40% peak power. So average rate of selling, we've assumed at around 5.5 rupees, which surely we are going to attain this year. because 30 to 40% of the power is sold as peaking power, which goes up as high as 10 rupees, 7 rupees, 8 rupees. And the regular power that you sell most of the time is around 4 rupees. So a weighted average would be around 5.5 rupees plus.
Okay, I got it. That would be from my side. Just one last thing. The anode capex of 2,200 crores is for 20,000 capacity, right?
Yeah, that's for 20,000 capacity.
And this 1 lakh, the expansion towards 1 lakh, that any plan we have formed up, or we have not formed up any plan as of now?
No. Right now, the land that we have is capable of taking around 30,000 tons. And so as soon as we complete this particular project of 20,000 tons, we'll quickly take a decision of expanding it to 10,000 tons more. And that would be done at a capex of around 800 crore rupees.
Okay. That would be from my
side.
But
that facility would come up by 2029, not before that.
No, but this 20,000 is coming by first quarter of 28. So it will hit your P&L FY29 entire year, right?
Yes. FY29 will be 100% there, and FY28 it would be kind of 40% capacity utilization.
Yeah. I think that's very useful, sir. I mean, I wish you all the very best. Thank you so much.
Yeah, we can send you all the details on Green Tech on a separate call whenever you can just touch base.
Yep. Thank you so much.
Thank you.
Thank you. The next question is from the line of Kirtan Mehta from Baroda BNP. Please proceed.
Since the start of the Middle East disruptions, what kind of needle coke price increase that we have seen happening in the industry? And we see further.
So far, I can't give a specific figure, but you can just take a ballpark number of anywhere between $200, $250 or $300. That's the kind of increase we are now seeing because of this rise in oil prices and also increase in demand. And going forward, we really can't comment because it is done quarter by quarter. Can't really say what happens next. It all depends. We are just concluding quarter by quarter and accordingly pricing our products.
But just to clarify, it will not have a very immediate effect. I mean, everybody carries stock of at least 3-4 months, and then the process of converting needle coke to electrode itself is 3 to 4 months process. So the impact will not be there for let's say, at least the next 3 to 4 months, 5 months.
Understood. And in terms of sort of our improvement in EBITDA from 14 million, the segmental profit from 14 million to around 140 million in this quarter, is it primarily because of the improvement in the realization, or are there any cost elements which has also reduced, which has helped in this improvement?
Yes, there is improvement in realization. So as we carry old stocks of needle coke prices remains there, and there's improvement in realization.
Would you be able to comment on regional trend in terms of are this improvement coming in any specific regions?
No. It is actually it's coming from everywhere. Wherever, because these are global prices, so whichever market, it's not that one market increasing and one market is not increasing at all. Some proportion matter. The quantum matters, differs from market to market, but when the price increase happens, it happens globally.
Right. This second follow-up question was on the US regulatory actions. There is a potential that the preliminary result can come by July and final could become by September. So what is our exposure to that market? How much volume we sell into US at this point of time?
Hardly, I would say less than about 10%.
About 10%.
But that because as a company like HEG, with our, we are very well entrenched in so many countries, all the major steel making nations, HEG is present, and US is hardly 10% of our business. So it's fine. We'll see what comes, as you rightly said. And let me explain, tell you a little more specific. CVD is by end July, the dumping is by end September. So we'll see what they come up with. We know that we have not done dumping, that is for sure.
Understood. And in terms of the outlook on the prices is primarily, would you be able to...
Sorry to interrupt you, Mr. Mehta. Can you please rejoin the queue?
Sure.
Thank you. The next question is from the line of Ahmad from Unifi Capital. Please proceed.
Yeah, thanks for the opportunity again. If I try to understand the structure of Bhilwara Energy, the hydropower plant owning entity, it owns 51% stake in the Malana Power entity, and the balance was with Statkraft, which we bought in. So to buy that stake, we paid around 1,200 crores.
Ahmad, sir,
how did we fund that amount? Yeah, I'll come back again. Is it clear?
Yeah, continue.
Yeah, I was saying that we bought 49% stake of Statkraft in Malana Power. How did we fund that?
See, we borrowed money 50% from the commercial banks and 50% partly coming from the family office and partly from BEL. Hello?
Okay. Yes. So when you merge it with the Green Tech entity, will any of that debt come on the books? Is my question.
No, actually 600 crore is already there in the books of BEL through subsidiary. So that will be there. By that time, I think we will be retiring all these debts.
Okay, got it. And second question is, post all the consolidation and when the Green Tech business lists separately, what will be the outstanding shares?
So it will be around 39 crore shares. Sorry, 32.9 crore shares.
32.9 crore shares. And if we add the Singularity...
Yeah, sorry.
Yeah, got it. 32.9, and then there will be one more tranche of Singularity which is left to be used, I'm assuming.
No, done.
Okay, after everything, it is 32.9.
So I'll explain you. Today, HEG number of shares are around 19.7, 9.8. So there will be around 13 crore shares which are being issued additionally, which is to be given to Singularity for their investment and to the other shareholder, which are promoter and RSW Limited, who is the shareholder in BL. So and after this, there is no fresh issuance of shares once this has been allotted.
Understood. My only question was that there were two tranches of Singularity. So in 32.9, both tranches are covered.
Yeah. So it already been done.
Okay, done. Got it. Sure. Thank you so much.
Okay.
Thank you. The next question is from the line of Ronak Agarwal from iThought PMS. Please proceed.
Yeah, so congratulations. Am I audible?
Yeah, you are.
Hello. Yeah, so congratulations on a great set of number. Once again, just want to understand a bit about America putting ADD and CVD. So let's say if ADD comes, just in a hypothetical scenario, how are we looking to de-risk the volumes? Like I think we sell around 20% of our revenue in America. So how are we looking to de-risk the same? And like what kind of contracts do we have with the players that are selling?
First of all, it's not 20, it was 10. I said 10. And with the kind of presence we have in the other markets, God forbid if it happens and if something comes which is totally unreasonable, it will not be difficult for us to absorb that volume in elsewhere. So we will cross the bridge when we come to it. Right now it's just speculation, what will come, what will not come. We'll see. If it makes sense, yes, we'll be there. We would love to be there. And if it doesn't, we have alternate markets.
Okay, so you are confident of the same, that you will be able to ship it to some other countries?
Totally.
Okay, yeah, that's it from my side.
Thank you. The next question is from the line of Kirtan Mehta from Baroda BNP Paribas. Please proceed.
Thank you for the opportunity again. One question on the graphite electrode market. The way, if I understand the market, I think its global market is around 600 KT for the UHP electrodes, and roughly one-third is supplied by the Chinese. Amongst the balance market, I think 2 Indian players and couple of larger Western players operate. While we operated around 90% utilization, the Western capacity utilization is still in the range of 60-65%. So what gives us a confidence that the pricing can improve when the market is still sort of in a supply surplus?
Okay. Now you see, if you look at the figures, since that COVID times, if you look at steel production of major steel producing countries, they've been quite stagnating. So today I can safely say that steel industry utilization is even less than 75%. The moment there is the production starts to increase, and ex-China is more than 50% from electric arc furnace, the graphite electrode demand will grow. And the figures which you gave, that the market of 600,000 and 200,000 is supplied by China, I tend to differ. It's not that number. It is much less, maybe half of that. So, we are operating at high capacity utilizations, as you rightly said. So that means we have markets, we have market presence to be able to sell our product. So we are all looking at the return of demand. We are looking at the new electric arc furnaces. Please tell me if you have ever heard of a new blast furnace coming up in Europe.